Good day! We are Group Spartans and we are about to tackle Intermediate Accounting 3, Chapter 7, entitled Notes, Part 1. First, ano nga ba ang notes? Ito yung mga additional information na makikita natin sa mga financial statements. It is very important dahil it makes a financial statement complete as a whole. Ano nga ba yung mga related standards ng notes? Ito yung PAS 1, PAS 8, at PAS 10. Sa PAS 1, it requires an entity to present the notes in a systematic manner. Sa PAS 8 naman, it requires a consistent application of accounting policies. And of course, sa PAS 10, it tackles about the events after reporting period. Under PAS 1, notes are normally structured as follows. Number 1, general information on the reporting entity. Of course, this includes legal form of the entity. Next, statement of compliance with the PFRS. Next, summary of significant accounting principles, which also includes narrative descriptions of the line items in the other financial statements. 4, this aggregation or breakdown of the line items in the other financial statements and other supporting information. And lastly, other disclosures, which includes contingent liabilities and recognized contractual commitments and non-financial disclosures. Accounting policies are the specific principles, bases, conventions, rules, and practices applied by an entity in preparing and presenting financial statements. So, paano nga ba pinipili at ina-apply ang mga accounting policies? Of course, unang-una na dyan ay ang PFRS. Dito, ang entities ay may choice only with respect to the choices of the available in the standard. Pero kung walang PFRS, ang only choice nila ay ang judgment, na kung saan it will result in an information that is relevant and reliable. Kapag gumagawa sila ng judgment, kinoconsider muna nila ang applicability ng mga references, kagaya na lamang ng requirements in other PFRS dealing with similar transactions or conceptual framework. Changes in accounting policies. It is under PAS 8. Papayagan lamang na magkaroon ng pagbabago when it comes to their accounting policies kapag una is nire-require ng PFRS. O kaya yung pagbabago na gagawin ay mag-result ng more relevant at more reliable information sa financial statement. So in this case, sa letter B, you are changing accounting policy voluntarily. Accounting for changes in accounting policies. If there would be any changes sa accounting policies, it should be accounted for using the following order of priority. Una na dyan, yung transitional provision in the PFRS, kung meron man. Pero kung hindi ito nag-e-exist, ang second choice natin ay ang retrospective application. Dito naman, it is very impossible to carry out. Paano kung hindi ulit ma-carry out ang retrospective application? Our only last choice would be the prospective application. But for now, let us focus on the retrospective application. Ano nga ba yung retrospective application? Ang retrospective application is the adjusting the opening balances of each affected component of equity. Best example niyan ay ang mga retained earnings. Para mas maintindihan nyo, I will give further example. For example, an entity wanted to change its accounting policy from the average to the FIFO cost formula. Lahat ng previous financial statements which are presented in the current year financial statement should be restated to apply the FIFO cost formula. So from average, magiging FIFO cost formula. Dapat lahat ng changes na gagawin is, it is as if FIFO had always been applied from the very start. So here's an illustration of a change of cost formula. Gaya nga ng sinabi ko kanina, dito, during ABC ko, decided to change from average to a FIFO cost formula. So the inventory balances would be, in January 1, the average is 1 million, FIFO is 1.2 million, in December 31, the average is 2 million, and the FIFO is 2.1 million. The income tax rate is 30%. So the question would be, what is the net cumulative effect of the accounting change in ABC's opening retained earnings balance? So the solution would be the average inventory in January 1, which is a given 1 million, FIFO inventory in January 1, which is also given 1.2 million. So the cumulative effect of gross of tax would increase to 200,000, multiplied by 100% minus the tax rate, which is 30%, total of 70%. 200,000 multiplied by 70% is equal to 140,000. So this is the cumulative effect, net of tax increase. So now, let's move on to changes in accounting estimates. Ano nga ba ang changes in accounting estimates? Many items in financial statements ay hindi mame-measure with precision, pero mame-measure mo siya through estimation dahil sa uncertainties inherent in business activities. Kailangan ang mga reasonable estimates para ma-provide yung mga relevant information. So ano nga ba ang pinagkaiba ng changes in accounting estimates at changes in accounting policy? Kagaya nga ng explanation ko kanina with regards to accounting policy, it normally results from a change in measurement basis. Same as the example I given a while ago when an entity changes FIFO to weighted average cost or to fair value. So ano naman yung changes in accounting estimates? It normally results from changes on how the expected inflows or outflows of economic benefits. If a change is difficult to distinguish, kapag hindi mo ma-distinguish kung ito ay changes in accounting policy or changes in accounting estimates, it should be treated as a change in accounting estimates. So ano nga ba yung mga examples of changes in accounting estimates? Una na dyan yung depreciation or amortization method, estimated useful life or residual value, required balance of allowance for uncollectible accounts or impairment losses, and estimated warranty obligation and other provision. Next is accounting for changes in accounting estimates. These are the changes in accounting estimates where you are accounted for by a prospective application. Kanina, di ba, narinig na natin yung term prospective application. Ngayon, ano nga ba yung prospective application? Kung sinabi natin prospective application, it means you are recognizing the effects of a change if it is profit or loss, either in A, the period of change, or B, the period of change and future periods if both are affected. Here's an illustration with regards to a change in accounting estimates. To be specific, it is a change in depreciation method, estimated useful life, and residual value. Always remember that there are two procedures when it comes to changes in accounting estimates. The first one is to determine the carrying amount of the asset as at the beginning of the period of change. Step 2 is to depreciate the computed carrying amount in step 1. Here's the problem. On January 1, 20X1, ABC co-acquired equipment for 1 million. The equipment will be depreciated using the straight line method over 20 years. The estimated residual value is 100,000. In 20X6, following a reassessment of the realization of the expected economic benefits from the equipment, ABC Co changed its depreciation method to sum of the year's digits. The remaining useful life of the asset is estimated to be 4 years, and the residual value is changed to 50,000. So the question would be compute for the depreciation expense in 20X6. The first step is to determine the carrying amount. So historical cost 1 million, residual value 100,000, depreciable amount 900,000 divided by the estimated useful life of 20 years. So the annual depreciation expense based on the straight line method would be 45,000. Historical cost 1 million, accumulated depreciation which is the answer a while ago, 45,000 multiplied by 5 years. Is equals to 225,000. So subtract 1 million to 225,000. So the carrying amount for January 1, 20X6 would be 775. After that, meron pa tayong step 2. Step 2 is to depreciate the computed carrying amount, which we get from step 1. So the carrying amount is 775,000, which we get a while ago. Residual value 50,000. Revised the depreciable amount is equals to 725,000 because we minus 775 to 50,000. Multiply by the sum of the year rate of 4 divided over 10. So the depreciation expense for 20X6 would be 290,000. So the entry to record the effect of the change in estimates in 20X6 in profit or loss is December 31, 20X6 depreciation expense 290,000, credit accumulated depreciation 290,000. Now let's move on to errors. Alam naman natin lahat ang ibig sabihin ng errors. Pag sinabi natin errors, ibig sabihin merong mga naging pagkakamali, merong misapplication of accounting policies. So financial statements do not comply with PFRS if they contain either material error or immaterial error. Kung sinabi natin material error, ito yung nagkukos para ma-misstated yung nasa financial statement. Pag sinabi naman natin immaterial errors, ito yung mga errors made intentionally. Ibig sabihin, ito yung mga alam natin na fraud, na sinadya mong ibahin or maliin yung nasa financial statement. Next, the types of errors according to the period of occurrence. Una na dyan yung current period error. Kung sinabi natin current period error, ito yung errors in the current period na na-discover during or after the current period, but before the financial statement were authorized for issue. Makokorrect natin siya by simply correcting the entries. Next is the prior period errors. Kung sinabi naman natin prior period errors, ito naman yung mga errors na one or more prior periods that were only discovered during or after current period, but before the financial statement were authorized for issue. Makokorek natin siya by retrospective restatement. Ano nga ba yung retrospective restatement? Pag sinabi natin retrospective restatement, ibig sabihin, tinatama mo yung mga naging prior period error, yung mga naging pagkakamali na as if yung error na yun hindi nangyari. Next, ano naman yung retrospective application? Yung retrospective application naman, ina-apply mo yung mga new accounting policies na as if yung policy na yun talaga, yung ginamit mo from the very start or yung in-apply mo from the very start. Here's an example illustration for current period error. On January 10, 20X2, prior to authorization of ABC Co's December 31, 20X1 financial statements for issue, the accountant of ABC Co received a bill for an advertisement made in the month of December 20X1 amounting 400,000. This expense was not accrued as of December 31, 20X1. So the requirement would be to prepare the correcting entries assuming books are still open and books are already closed. Ignore income taxes. So the first requirement is to assume that the books are still open. When you say books are still open, ibig sabihin hindi pa nakakapag-closing entries. So nominal accounts can still be used in correcting entries. So the answer would be December 31, 20X1, debit advertising expense 400,000 and credit advertising payable 400,000. So the next requirement is to assume that the books are already closed. So sinabi naman natin books are already closed, ibig sabihin nakapag-closing entries na. So hindi na natin pwedeng gamitin yung nominal accounts. Kaya ang gagamitin natin for correcting entries ay yung mga real accounts lang. So the entry would be January 10, 20X2, debit retained earnings 400,000, credit advertising payable 400,000. If income tax is not ignored, the entry if the books are already closed is as follows, assuming that an income tax rate is 30%. According to PAS 12, income taxes requires the recognition of current or deferred taxes on adjustments to the opening balance of retained earnings resulting from either change in accounting policy that is applied retrospectively or the correction of an error. So, the entry would be January 10, 20X2, retained earnings 400,000 multiplied by 70%, 280,000. Debit income taxes payable 400,000 multiplied by 30%, 120,000. Credit advertising payable of 400,000. Here's another example when it comes to period error. On January 15, 20X3, while finalizing its 20X2 financial statements, ABC Co discovered that depreciation expense recognized in 20X1 is overstated by 400,000. So the requirement is to ignore income tax. What is the entry to correct the prior period error? So the entry would be January 15, 20X3, debit accumulated depreciation 400,000, credit retained earnings 400,000. Types of errors. Una na dyan yung errors in principle. This arises from lack of knowledge of accounting standards or procedures. Dito, kapag wala kang alam with regards to the procedures or the standards, ibig sabihin, you are having errors in principle. The second one is the clerical and similar errors. Ito naman yung mga mathematical mistakes, oversight, at misinterpretation of facts. Una na dyan yung transplacement error. Kung sinabi natin transplacement error, for example, 1,000. Nadagdagan mo ng 0 o nabawasan mo ng 0. Transposition, for example, 1562. Nagawa mong 1526. Next, errors of omission. Ibig sabihin, for example, yung accountant nakalimutan na i-record yung transaction. Next, errors of commission. Dito naman, for example, yung accountant na-record yung transaction twice. Next, compensating errors. Dito naman, for example, there is an erroneous credit is compensated by an erroneous debit. Next, accounting system error. Dito naman, there is a bug in the computer program. And lastly, counterbalancing and non-counterbalancing. Let us focus on this type of error. First would be the counterbalancing errors. Counterbalancing errors are errors which, if remain uncorrected, are automatically corrected of offset in the next accounting period. Yung mga effects sa financial statement will automatically reverse in the next accounting period. Kaya nga counterbalance kasi ibig sabihin nun is reverse. Paano? Ano ang mga magiging effect sa counterbalancing error on year-end kung sa profit or loss? Sa year 1, of course, it will be overstated. Sa profit for year 2, it will be understated if the error remains uncorrected. However, the profit in year 3 will be unaffected. How about the effect in the statement of financial position? Of course, in year 1, it will be erroneous. It will still have an error. In year 2, in year 3, it will be unaffected. Here are some of the examples of counterbalancing errors, including errors relating to the following. Number 1 is inventory, 2 purchases, sales, prepayments and unearned items, and lastly, accruals for income and expenses. Next is the non-counterbalancing errors. Ito naman ay kabaliktaran ng counterbalancing errors. Sa non-counterbalancing errors, errors are not automatically corrected the next accounting period. So for example, if there is a non-counterbalancing error causes the profit in year 1 to be overstated, the profit in year 2 will be unaffected. However, in the statement of financial position, year 1 and year 2 will be uncorrected or erroneous. So ano nga ba yung mga examples of non-counterbalancing errors? Number 1 is the misstatement in depreciation, erroneous capitalization of costs that should be expensed outright, and lastly, non-capitalization of capitalized cost. Next is the relationship between accounts. In the periodic inventory system, the following relationships between accounts can provide guidance in determining the effects of counterbalancing errors on profit or loss. To say direct relationship, it means if an ending inventory is understated, profit is also understated. The following other relationships are derived from the relationship shown below. There are two types of relationships, the direct relationship and inverse relationship. When you say inverse relationship, it just means that if an account is understated, the other account is overstated. Just like this example, if the ending inventory is understated, the related account, which is the cost of goods sold, is overstated. Another example of direct relationship is beginning inventory and purchases and cost of goods sold. An asset-related account and profit has a direct relationship, meaning if the asset-related account is understated, the profit should also be understated. Some of the examples would be the error on prepaid asset and the error on accrued income. How about sa liability? If a liability-related account to profit has an inverse relationship, meaning if a liability-related account is understated, the profit is overstated. That is the meaning of inverse relationship. Some of the examples would be an error on unearned income and error on accrued expense. Next, events after the reporting period. Ang sakop ng events after the reporting period ay yung mga event na mula sa end ng reporting period hanggang sa date ng authorization ng financial statements. But first, ano nga ba yung date of authorization? Yung date of authorization, ito yung date na kung saan ina-authorize for issue ng management or ng entity ang financial statement, regardless pa kung final na ba or subject to further approval pa. Here's an example situation. ABC Co. completes the draft of its December 31, 20X1 year-end financial statements on January 31, 20X2. On February 5, 20X2, the Board of Directors reviews the financial statements and authorizes them for issue. The entity announces its profit and selected other financial information on February 23, 20X2. The financial statements are made available to shareholders and the others on March 1, 20X2. The shareholders approved the financial statements at their annual meeting on March 18, 20X2, and the approved financial statements are then filed with a regulatory body on April 1, 20X2. Dito sa example situation na to, on January 1, 20X2 ang end period at February 5, 20X2 ang date ng authorization, kaya mula January 1, 20X2 to February 5, 20X2 ang events after the reporting period. There are two types of events after the reporting period, the adjusting events and non-adjusting events. But first, let us focus on the adjusting events. Kapag sinabing adjusting events, these are those that provide evidences of conditions that existed at the end of the reporting period. Kailangang i-adjust ang financial statements sa ganitong event. Some of the adjusting event will include the settlement after reporting period of a court case that confirms that the entity has present obligation at the end of the reporting period. What about the non-adjusting events after the reporting period? Kapag sinabi namang non-adjusting events, these are those indicative of conditions that arose after the reporting period. Hindi nito nire-require na i-adjust ang amount sa financial statements, however, kapag relevant sa user ng event, dinidisclose ito sa financial statement. Some of the non-adjusting events includes the changes in fair values, foreign exchange rates, interest rates, or market price after the reporting period. Here is an illustration with regards to identifying adjusting and non-adjusting events. ABC Co's current reporting period ends on December 31, 20X1. The following transaction occurred after the end of the reporting period. Here are the transactions. Dito sa illustration na to, ang end ng reporting period ay December 31, 20X1 as mentioned sa problem. Sa mga given transactions, ang adjusting event ay ang letter E lang. Itong E. On February 10, 20X2, ABC received notice as of a litigation in relation to an accident that happened on December 31, 20X1. ABC estimates probable loss of 200,000. Kasi diba, ang adjusting events are those that provide condition that existed at the end of the reporting period. Well, yung letter A to C ay ang mga non-adjusting events. A to C ang mga non-adjusting. Bakit? Those are conditions that arose after the reporting period. So the solution would be the estimated liability of pending litigation of 200,000. So the total adjusting events would be 200,000. And lastly, for part 1 is the disclosure. Ano nga ba yung mga dinidisclose sa notes? These are the following. First one is the date of authorization for issue and who gave the authorization. B, an update on the disclosures to include the effects of adjusting events. C, non-adjusting events that are material, including the nature of the event and the estimate of its financial effects.